Ahoy, crypto pirates. Thank you, Hexicans and non-Hexicans alike, for joining us today. I've got a very, very special guest, one that we want to give Crypto King a huge round of applause for being able to make this happen for us. We've got a gentleman on here that is very, very like-minded in the contrarian thinking that us Hexicans do. And he's got a lot of experience to share with us today. So without much further ado, I'd like to bring on Mr. Reggie Middleton. Thank you, sir, for joining us today.
You're very welcome, my friend.
Yes, it's a definitely a pleasure to have you. I appreciate you taking the time to address. We've got a community of about 25,000 deep in the Telegram community. And then we've got over 200,000 wallets that contain Hex, and that was really the basis for which we decided to start this show and allow a forum for our community. And as time went on and we were able to show people after the launch phase that this was not a scam, there was no rug pull, there was no exit scamming and things of that nature, then we decided, okay, now it's time that we start, after defending ourselves for a year, start reaching out to other communities. And
I know the feeling.
you probably know a little bit about that. So, and I'd like to talk with you a little bit about that here going forward. So we figured it's bridge building time. It's time to talk with other communities and other projects, because there's no one coin to rule them all. There's not one project that that does everything, that replaces all the products of the bank. And you have a really, really neat project or a product, and I'd really like to talk more about that too. But before we do that, if you don't mind, I would really like to show, this is the file that you, or the, let me bring this up here real quick. The video that you have on your website does a really good job. Let me know, you guys, if you guys can hear this. Can you hear that, Reggie?
I can't hear it.
Okay.
But I know what it says, so as long as everybody else can hear
it. Yeah, it's for the rest of you guys, I'm gonna go ahead and post this in the chat for you, so you guys can all take a look at this video at your convenience. But sometimes it works with the sound and sometimes it doesn't. There's a way to make it work, but I don't play with it enough. So I'll just let them watch that at their convenience. But I wanted to start by asking you a little bit about your background. So you've got a really interesting background. I pulled up a Family Office Insights an interview that you had done. I'm not even sure when was this, June 14th of 2018. And it really piqued my interest when I was doing a little bit of background research on you. So we'd have some topics to talk about today. And I see that your only W-2 income you ever had in your adult life was working with Prudential Insurance. Is that correct?
For about 9 months.
For 9 months. And what was your role there?
I was an insurance agent. I sold insurance. It wasn't anything fancy. It apparently wasn't for me either. They ended up firing me. And, you know, that divorce went on to lead to other things.
Yeah, absolutely. Well, I asked because it's near and dear to my heart. I'm actually broadcasting from my insurance agency. I have a multi-state agency with 2 locations in 2 different locations. So that immediately struck my interest. I wanted to know a little bit more about that. But you moved on to some pretty interesting stuff. So my wife and I, for years, have been following Bigger Pockets and real estate investing. And I see that in 2000 to 2006, you were also a real estate investor. Can you tell me a little bit about that?
Yeah, I started, the first purchase was actually family home. But I had friends who were real estate attorneys, and they were telling me for a couple of years that I should get into real estate. I'm pretty analytical. You know, I'm not a mathematician, but I'm a strong believer in 1 + 1 should equal 2, or at least somewhere thereabouts. And after taking a look at what turned out to be a very strong fundamental reason for prices to go up, I jumped into the residential real estate and small income producing sector. You know, 1 to 4 families, 2 to 4 families, etc. That's in the New York, downtown Brooklyn, Fort Greene area, starting in 2000. And those fundamental factors were very strong, but they were also aided in a few years by a bubble. When you add a fundamental reason plus a bubble, you get extreme returns. My returns were extreme. They were so extreme that 1 + 1 started to equal like 119. And again, I'm not a mathematician, but that seemed to be a bit extreme. So about 2005, 2006, I started selling off the properties. I finished the last one in 2006, and the first half of 2007, the bottom fell out the New York real estate market, and then eventually fell out the entire U.S. market and reverberated around the world. And we all know why, but I went, since I saw it coming, I hired a team of analysts who worked for me, and we decided to short everybody who would ever do business with us. That included Bear Stearns and Lehman Brothers and Countrywide and Washington Mutual. Most of those companies don't exist anymore. So those shorts were appropriate. So I was able to catch it going down. I was able to catch it going up physically. I was able to catch it going down with puts. I missed it coming back up though, because the funny math came into play again. Mark-to-market rules were suspended. So basically, banks and entities were able to decide what their assets were worth versus allowing the market to decide what they were worth. In certain places, like in Brooklyn, where I'm from, that's called lying.
Yeah, there was no shortage of that coming back up, was there? There were a lot of inside deals that made some things happen with imaginary funny money that got printed into out of nowhere. That made that math pretty funny, as you say, where 1 + 1 didn't equal 2 anymore. So, is that that was the beginning of your hedge fund, though, right? After you sold the properties in 2006.
Well, I never opened a fund. I planned to open a fund, but
okay.
Apparently I didn't go to the right schools, and I didn't have the right friends, and didn't talk and look the right way, so it didn't work out. So the part and parcel of opening the fund was to demonstrate to everybody that I sort of knew what I was talking about. So I started a blog. First, I started writing on Nouriel Roubini's blog for free, just commenting. My comments were considered prescient, so a lot of people suggested I wrote for my own blog. So I started my own blog, writing for free, and people started getting very belligerent, in my opinion, demanding it. And how come you're not answering? Like, because it's 3 o'clock in the morning. So the best way to get somebody to leave you alone is what? That's the best way to get people to stop talking to you.
Charge them.
Exactly. So I put a paywall up. I slept for 3 days straight, like a baby. Like, got a call about 9:30 one morning, and it was Morgan Stanley asking me if they wired $25,000 to me, would they turn on 3 of their, I think it was called strategic strategies, proprietary strategies. So I'm like, of course, that'll pay for my analysts. So now, at least pay for them for a month or two because they were offshore. And that was the beginning of Boom Bust Blog, which had a fairly long and storied history. We had a lot of strong calls. That video that you just put on had a few of them. The housing crash, commercial real estate crash, Lehman Brothers, Bear Stearns, Washington Mutual, Countrywide, Apple going down, which everybody laughed at until they dropped, Google going up, the European debt crisis, Bitcoin back in 2013. I think when I started, I said Bitcoin was definitely worth buying at about $200 a coin, 170 to 270 a coin roughly. I think it's about 47,000 and change right now. So, decent call.
I think you called that one right.
Yeah. And there's a lot more. There's a lot more going on. I am in 2013, towards the middle of the year, I took the plunge 100% into crypto, and I see things differently. A lot of people poo-pooed the way I did things. I was able to sympathize with you 100% with the proving you're not a scam, etc. I wanted to start a business. So no, I didn't spend a lot of money on a fancy website. And no, I didn't write a white paper because we had a product. So I don't see the purpose of writing white paper when you have a product. That's like, you're getting in somebody's car, driving away, demanding to see the blueprints for construction. I'm like, you're driving the damn car. What do you need?
Yeah.
Blueprints on how to build a car for, right?
Yep.
So we came up with some interesting ideas, basically viewing crypto as a series of smart contracts to replace the banking industry as it currently was, versus speculation or money remittance, because money remittance is, pervasive, but very, very low margins because it's very easy to do it. It's going to get even easier with the blockchain. And so we came up with ideas. We came up with a proof of concept, the MVP, and a fully functional Veda doing the product, which eventually became what we call the Veda. And it just did swaps. It was able to swap arbitrary value through arbitrary distances on a counterparty risk-free basis. At the time, it was unique and phenomenal. As a matter of fact, now 8 years later, it's still unique and phenomenal from our perspective. We filed a patent application relatively early, and I believe we beat everybody to the punch. It took a long time. You have to pardon me, because
We
my
love dogs,
daughter's
so it's all
bulldog
right.
puppies are calling up
That's all
on
right,
the
because we love
Get
dogs
down,
here.
dog. Yeah. So there are two of them. They're Old English bulldogs, so they're about 80 pounds each, and they're
Yeah.
puppies, and they don't seem to understand.
And they're stubborn, man. It's tough to train the bulldogs. So
I mean, they're young, yeah. So
yeah.
We were very early. Yeah. So we were very early. We prosecuted patents. We went through a lot of nonsense. We didn't open source everything, so we were caught a fraud for having an empty GitHub. Nobody bothered to even consider the fact that the GitHub was private. I call that ignorance.
That's what happens when you have devs trying to tell you how to run a business, and a businessman trying to tell devs that's not what's important. Here's what's important: having a working product, not a white paper with a roadmap to failed promises. So I agree with you there.
Until you have a product or service, you don't have a business. It's
Yep.
really just that simple. We were called a fraud for having a website that wasn't as thick as everybody else's. We were called a fraud for not having a white paper. So we fast forward 8 years later, 7 years later, depends on which part of the business you are starting at. And we have built several products. Of course, we ran into some adverse regulatory issues, which ended up in an adverse litigation, which didn't end well for us. We were stripped of all our capital, financial and otherwise, but they left the intellectual capital. That turned out to be fortuitous, because we now have the early patent that we filed, or patents that we filed in 2014, were granted in the jurisdiction that gives us segue into a strong cross section of global GDP. With the product basically is DeFi. I created DeFi. I came up with the concept and created it in 2013. We created an application running DeFi in 2013 on a Bitcoin blockchain. And we opened it.
How was that, real quick? How was that working with the Bitcoin developers? Were they welcoming at all on that?
I don't know. Couldn't even tell you. I didn't communicate with the Bitcoin developers. So I pretty much did my thing. In 2014, January, we did a public video to demonstrate it, but we settled the first swap peer-to-peer in December 2013. And in about May of 2014, we actually had a public beta available for everybody. It ran for about 2 years. Towards 2015, 2016, it was pretty much ready to go. As for how well it was scaled, we didn't get to scale it. And then we had some regulatory concerns. We thought that the Bitcoin swap may be come under CFTC jurisdiction. So we voluntarily pulled it because we didn't want any regulatory issues. That didn't work out because we had regulatory issues anyway, but we tried. And we ran out of money, moved to the F blockchain, came up with another very, very unique product, basically exposures, investment funds, peer-to-peer exposure. We closed that due to regulatory issues. Our regulator told us to close it down. We closed it down. We built another app a couple of months later. That app was peer-to-peer gold transfer and trading, tokenized gold. Very, very slick, product. It's still running right now, and I think it's the best implementation of tokenized gold ever. And it was one of the first as well. And then we had a attached product, but that as we were building the MVP is built out, but then we had this lockdown and nobody's really paying taxes anyway. So a tokenized tax product doesn't work very well when nobody's paying taxes because nobody's making money. And then for about a year and a half, a year and 4 months, I was basically licking my wounds from a very adverse regulatory. 1 second. No. From a very adverse regulatory outcome. But then we got up, started, licking our wounds again. We healed, and we have the patent granted. This patent basically proves that not only that I discover DeFi, but I patented it. And this is peer-to-peer value transfer on a counterparty risk-free basis. This is a very big thing. It's probably a lot to get into now, but this combined with the fact that central banks are looking to create their own central bank digital currencies and potentially run them through blockchains puts us in a very, very enviable position.
Yes, very absolutely. Absolutely. So I would say that you are correct that you can rightfully claim the godfather of DeFi title and you've got a patent to prove it. I have a quick question, and we'll move to it in just a second about what DeFi stands for here in just a second. But I want to touch base one last.
Let me just jump in on that. I have to mention. So Wikipedia, the admins at Wikipedia apparently disagree because they say that a granted patent is not a reliable source. This is from the Japanese Patent Office. It's not as reliable as an article from Bloomberg for MakerDAO.
Okay.
And my 24 some odd appearances on CNBC, announcing this in 2014, way before everybody else, and Bloomberg and Forbes, results are not good enough.
Yeah.
So, warning to everybody, Wikipedia is a very, very biased and inaccurate source of information.
Absolutely. So, well, if you didn't kowtow and bow down to the tech giants in Silicon Valley, then you don't get the name where you want it to be. You don't get they won't put the title up in Wikipedia on your behalf. So going back to the being in a good place is with the central banks wanting to digitize money on a blockchain. Do you think that it puts you in a good place because of your just being a first mover advantage, or is it because of the actual patent that gives you that position that most would be enviable over?
Okay, well, that's a complex question. No, out. Stop. The two puppies they're wrestling. T'Challa, no. So that's I should have locked him up. So I give him one more chance. Don't go lock him up in a vestibule. So that's a compound question. First, let me go through a quick overview of how I see things coming or going. Crypto pre-2021 is going to be very different from crypto post-2021 because now the big boys are coming in and they're coming in full steam. The reason, honestly, especially from the very big boys, is Facebook. Facebook's Libra terrified sovereign nations because before it was Bitcoin's a scam, it's volatile, et cetera, et cetera. I'm not going to get into that conversation. If it is a scam, it's a scam that went from 20 cents to $47,000 in 10 years. It's a decent scam.
It's a great scam, and still no one's exit scammed with that money yet.
Yeah, and at the same time, the dollar has fallen by about 30%. So you're talking, I can't even calculate 20 cents to 47,000. You smarter guys have to do that. The same thing with the euro, the pound, and everything else. But the issue is that cause central banks and sovereign nations to take things seriously. But I think from a cultural perspective, they cannot move very, very quickly. They can debase currency quickly because that's where they have the tool set to perform. But creating something new is very, very difficult. And the best way to create something new is to rely on the intellectual capital and the entrepreneurial spirits of those who did it in the first place. The U.S. has basically chased all of that offshore. I have to run offshore. I was hurt very, very badly in dealing with the U.S. Um, China is very, very aggressive. Now, China, China's aggression will cause a lot of entities to be wary of dealing with it. But at the end of the day, they have built and they have launched already, and they're in the fourth round of beta testing, their own digital yuan. And they have, if I'm not mistaken, McDonald's and Walmart and Starbucks testing it out. They're giving it out via lottery in their biggest cities, including Beijing. It is, of course, centralized because China, like every other nation, does not want to give up control of its sovereign currency and money to the private sector. But they're also attempting to open it up. So they have a blockchain network that runs with other blockchains, including permissionless blockchains. So not only does it have permission blockchains such as Hyperledger, etc., it also runs with Ethereum and EOS. EOS was also chased out of the States, if I'm not mistaken. China is embracing intellectual capital that's been forcibly pushed out of the U.S. That does not bode well for the U.S., and that bodes rather well for China. Our patent basically controls swaps of value. Okay, that means that these CBDCs, the financial products that normally use regular current digital currency, and almost all currency is digital. Like if I ask you how much money you have, you probably tell me how much money you have in the bank versus dollar bills in your pocket. Okay, but that's centralized. Most CBDCs will probably be centralized, but once you run it through a blockchain, then they go through a decentralized network. We are in a very, very strong position there, an admirable position. And it was created, in a bedroom in Brooklyn. Okay. Imagine if a country chased out the intellectual capital that built the empires that were created in bedrooms and dorm rooms and garages. That means, theoretically, Google would be in Mandarin, HP would be in Mandarin, Apple would be in Mandarin, Hewlett Packard would be in Mandarin, Amazon would be in Mandarin. Okay, so the way the U.S. is operating is they have their favorite sons and daughters. If you're able to access a large amount of venture capital, okay, you build up an idea, you get to succeed, you interface with the status quo, etc. But this nation of 330 million people, a lot of those people look different, act different, have different access to capital or no access at all. That's still intellectual capital there. A lot of smart people. A lot of those people, if they can't get to this VC money or private money, they're chased offshore, and then they have to build on other blockchains or other jurisdictions. That's scary because it is literally putting the U.S. at a significant disadvantage. At the same time, it's giving an advantage to those outside the U.S. So brush up on your Mandarin, everybody.
Yeah. So you think that protectionism of the existing old guard is going to affect the innovation of the United States and its world position then?
It's already done it. It's already done it. Look at the biggest exchanges, crypto exchanges. All right. You name the top 10 crypto exchanges, I think 1, 2, or 3 may be in the US. If I'm not mistaken, crypto was originated in the US. And less than 10 years later, or a little more than 10 years later, the bulk of it is outside of the US. And we're just getting started. If we would have did this during the burgeoning days of the internet, the US would not be the superpower that it is now. I can tell you that for a fact, not the economic power.
I think you're right. We've had these discussions of how we were the first mover, and that's the only advantage that we have as an American nation. But that is quickly going away because you look at how many different platforms, exchanges, different projects within the crypto space that you have to use a VPN just to interact with if you're in the United States. And I don't think that I think the regulatory bodies are quite honestly scared and not sure what what position to truly take on it. And they're at the behest of our leadership. And our leadership, when you look at our leadership here in the United States, I don't know why you let 80-year-old geriatrics determine the future of technology. The guys who are afraid to check their own email, but apparently that's what we've devolved to here in the United States, and I think that that pushes a lot of our underlying regulation going forward. So I want to ask you a little bit about the Veritasium platform. Can you give us a little bit of information? Because I see you guys have so many products already. I mean, I'm looking at 6 right here. And for someone who isn't familiar with like a legacy finance system, this could be possibly overwhelming for them unless they have a little better breakdown on what products it is that you guys offer. Can you give us a little bit of a breakdown? Give us a 30,000 foot view, and if there's anything specific that you want to go deeper in, let's go ahead and let's jump into that. Let's dive in.
Okay. Well, to begin with, due to adverse litigation, no products are available in the U.S. except for the tokenized precious metals, and that's up and running. Everything else has been deprecated, closed down, and we are looking into opening up outside of the U.S. We just have to, find capitalization. Yep. But the concept in general is peer-to-peer capital markets or peer-to-peer value transfer. It's the ability for Peter to do business directly with Paul without knowing Paul, without trusting Paul, safely. Okay, and that's it in a nutshell. Value transfer can mean almost anything on a decentralized or distributed basis. We're going to get to DeFi in a minute, by the way. Okay. So that's what the products are. The original product was a Bitcoin swap, where the Bitcoin price was adjusted by a third-party data feed. Some people call those perpetual swaps, etc. We came up with that in 2013. We have, say, an investment fund or an investment pool where you put capital in. That capital uses our research, and we're pretty strong on research, to purchase assets, and then you participate in the rise and fall of those assets pro rata, and then you can empty that out and have either those assets sent back to you or the capital sent back to you in the form of ETH at the time, because stable coins weren't popular. But the rewrite would be ETH, stable coins, maybe even CBDCs. The third product was tokenized gold, tokenized silver, tokenized platinum. Basically, there's an entity that is a precious metals deal. You buy the precious metals, they have it shipped to you, or you could buy it and have it stored in a vault, and then you're given a receipt. But instead of a paper receipt, it's a tokenized receipt. And that receipt is in bearer form, and you can buy, sell, do whatever you want with it. There's a lending platform where you could buy, where you could borrow or lend your tokenized assets. And there's tokenized tax product that is not, that's an MVP stage right now. And there's not a reason to move forward until things stabilize economically around the world for us. And then there's the overall patent, which basically allows us to protect, if we deem necessary, peer-to-peer value transfer on a trustless or zero trust basis. And that could be potentially big. I'm not saying that's the case, but I can give you a dramatic hypothetical.
Yeah, please do.
Central banks and money center banks fund each other. They fund each other by cross-currency swaps. So let's suppose Europe, the EU, the ECB is running low on US dollars, okay? And they want access to US dollars. They can do a Euro US dollar swap with the bank, with the Federal Reserve, okay? They do this through the blockchain, and they can potentially, theoretically, hypothetically, in certain scenarios, potentially be infringing on our IP. And we can tell the central banks no, or pay us a fee, or use our product. Now, I don't know if I have the litigation chops to tell the central bank no, because they'll tell them what will happen. But this is a theoretical scenario to show how important it is to understand the blockchain technology from a truly financial perspective, in lieu of just writing code, being a developer. Because there's a lot of development and software engineering talent in the space right now. But when I first started, it was relatively sparse because it wasn't as popular. And the financial economic talent that understood the capability of it was close to non-existent in 2013. Now, as the world is starting to move to distributed and decentralized platforms and blockchain, it's very, very important, very much so. The blockchain, decentralized apps, distributed apps, or platforms are to 2021 what the internet was to 1993. Okay,
I like
so
that. Yeah.
because if you could somehow get patented processes on e-commerce in 1993, you're in a pretty strong position.
Mm-hmm.
Unfortunately, my even mentioning that was not received well, which means maybe I shouldn't mention it now. So let's rewind and take that back.
Okay. Okay.
Okay, but the patent's been granted, so
Yeah.
it's not as if I'm exaggerating. But let's take the conservative route and let's rewind what I said and discard it. And you can always just read the patent if you want.
Absolutely. So tell us a little bit about DeFi.
DeFi is the ultimate manifestation of DeFi. Our products run always on a Bitcoin blockchain. Our products run always decentralized from a code perspective, but from an asset perspective, which is by far the most important for a financial practitioner, it is fully distributed. You at all times have your private keys, have control of your assets until you give it up to a contract. If and when you give it up to the contract, that contract is computer code. The terms are clearly delineated. You actually choose the terms and you see it, you agree to it before you put it up on the blockchain. When you put the assets on the blockchain to do business with another party, you use the blockchain to replace that party as a counterparty. So if I were to send you USDT, you would send me ETH, okay? And we adjust that price contingent upon a data feed for whatever you wish. Or let's make it very simple. You send me USDT and I send you USDT. We both do $100,000 each, predicated upon the price of GameStop.
Okay.
You want to go long GameStop, I'll go short GameStop. Okay. Normally you have to worry about me paying. Okay. And I'd have to worry about you paying, and we'd have to worry about the third party, the brokerage, i.e., Robinhood,
Yep.
allowing us to trade, let the deal go through.
Yep.
On a DeFi basis, you don't have to worry about that because computer code, once you lock the contract in, it executes. It doesn't have the option not to execute. It's simply computer code. Our assets are locked into the blockchain. The blockchain is now my counterparty. The blockchain is now your counterparty. So we're no longer counterparties to each other. We're counterparties to the smart contract. And it does what it does. Okay,
Absolutely.
now you can actually speculate on GameStop. Now let's take all regulatory concerns out. I'm talking just on a capability level, not on a regulatory.
Yes, a hypothetical. If they're laissez-faire type market.
Right. And it's not hypothetical because we've developed the products, but
yes.
Yeah.
I'm at the regulatory hypothetical that it doesn't
Right.
exist and it's a laissez-faire market.
Yes. So we have solved the GameStop issue. And GameStop is interesting to me because the last interview I did, I was asked if, I was asked to comment on how the GameStop event hurt or damaged the market. And I said it didn't hurt the market. It showed healing in the market, not because GameStop price reached some fundamental equivalent in valuation. It was overpriced.
Mm-hmm.
But you allowed all participants in the market to do what only one group of participants were able to do in the previous XYZ time period. So basically, they were able to pump a stock. Well, the hedge funds do it all the time.
Yep.
Okay, so I believe if you have an equalitarian access to markets and to the mechanisms of the markets, you will eventually have better markets. It's just that simple.
I agree with that. The markets become more efficient as they arbitrage to a lesser friction. I completely agree with that.
So DeFi does that on a basis, and to show it, this is a centralized market. You have a hub. Let's say it's NASDAQ. You have all the participants simply go to NASDAQ and then come, and then in order to do business, you go to the gatekeeper, the rent keeper. Decentralized, you have a bunch of little mini NASDAQs. Okay, that's decentralized. On a DeFi, totally distributed basis, think of a billion dots, and each line connects each dot at will arbitrarily. One market is vastly better than the others, right? And that's DeFi. On a DeFi basis, it's much better than centralized. The centralized basis is how we've been doing business up until right now, today, actually. We're not decentralized yet, only most crypto is. And when you decentralize something, economic forces tend to force congealing and coalescing into a centralized market again, like Bitcoin, Ethereum, etc. If you take a look at hash power nodes, it's much more centralized than the mantra would let you lead you to believe.
Oh,
On a DeFi
absolutely.
basis, centralization is not necessary.
That's interesting. That's an interesting concept. You've piqued my interest. I'm gonna be doing a lot more research, and I'm gonna be digging into your website quite a bit more than I did prior to this, because I want to know more about this. I think that it's a revelationary market ideal and mechanic that you've come up with. So I'm hoping that we might be able to have some conversations in the future regarding this. And I love, and it's unfortunate that you guys don't have any products available in the United States, but such is the regulatory concern, which actually brings me full circle back around to GameStop and how isn't it ironic that all of a sudden it's not the hedge fund, but the people that are manipulating the stock, and all of a sudden that's not okay. And there's talk of regulations on how we're going to regulate the people and stop them from pumping and dumping a stock when the hedge funds have been doing this since the beginning of the markets themselves.
And I'm not even sure it's accurate to say they are manipulating a stock. You buy a stock if you think it's going to go up, or is it that you're buying a stock because buying a stock will make it go up? And exactly what point is it manipulation?
It's a good point. That's a
So
good
I'm
point.
not a lawyer, but I'm a dude that can at least fantasize about right or wrong or facts. So if you buy a stock because you think it will go up, is that manipulation? If that's the case, then there's a lot of manipulation going on.
Every time you buy one, because
Right.
every time you buy a stock is speculation as to whether it's going to go up or down.
Right.
So that's an interesting point. Yeah, I like that. It's when you follow it through to its end conclusion.
Yeah, from a fundamentals perspective, I think the entire most of the stock market is dramatically overvalued, just like every single other risky asset, because the Fed's printing and QE has destroyed price discovery, and and it's destroyed the ability to charge for risk.
Yeah.
And so risky assets are through the roof. Real estate, stocks, bonds. The bonds have been on a 50-year bull run, and now they're piercing negative almost everywhere. Bank of England already warned everybody, negative, here we come. There's only one last holdout, and that's the US. Okay. On a real basis, we're probably negative now anyway.
Yeah.
On a real basis. So
is that with factoring for inflation, you mean?
Yeah. Factoring for, and the thing is, the measurement of inflation is just, again, manipulation. As long as you factor out everything that you need to live, there is no real inflation. So don't eat. Okay.
Yeah, right.
If you're in New York, as long as you don't heat your house, you're good. Don't put in any clothes. But without that, there's no inflation. Or muted core inflation with a bunch of sleepy, cold, shivering people.
So I'm sure at this point in time, since you guys operate on the Ethereum blockchain, that there is some knowledge, obviously, of the Uniswap protocol out there. And in fact, I believe there's even some pairings of the Veritasium token on Uniswap. Am I correct there?
I believe there are. I actually have been so much into my own thing that I just tried Uniswap for the first time, I think, day before yesterday. But
okay.
The community is very, very, involved and knowledgeable in Uniswap.
Yes.
And it worked very well, by the way. Very well. I don't see why you use finance with Uniswap. But
yeah, you got very low friction as long as you're going ERC20 to ERC20. Very,
Right.
very low friction. So what you've told me earlier throughout this interview, it seems like the Uniswap protocol really is something that you could get behind because it gives you that peer-to-peer without needing a central authority, because it is it's a value transfer, so to speak, without needing a middleman to make the transaction happen. So
Exactly.
are you looking forward, and I'm certain you think that there's going to be more to come, but are you looking forward to more of these protocols being released that will allow people to have more sovereignty over their own money?
I would like for it to be standard practice, but again, that challenges the status quo. Um, I think it would be foolish to assume that the regulators are not looking into this. And the regulators that cover um, much of this area appear to regulate by enforcement, which is painful and results in, IP again and intellectual capital. I see an IP running away from the states. It would be good to have a conversation and say, this is what we think should be allowed. This is what wouldn't be allowed. You have any comments, have a discussion, and then, let things take their natural course. I think the vast majority of participants in the space want to do, you know, the legal thing,
Yeah,
but in order to do it, you have to know what it is,
yeah.
you know,
There need to
and
be clear, defined, outline terms as to what is and isn't okay.
right, after the fact, being, approached with bludgeons and hammers, you know, it results in literally everybody running off to greener pastures. I think, and I can't reiterate this enough, um, I think we have a significant brain drain in the U.S. and it's purposely being done. This happened before. Germany had a very, very smart guy. They persecuted him. He ran out and he ran to the States. And his IP created um, was the ground floor for the atomic bomb, which was then brought back over to the Axis powers and ended that war.
Yep.
The guy
Ironic.
started from there and left and came over to the States, and the States used his IP against the area where he came from.
What a
I
great
can't see that
analogy.
not happening to the States. I just can't see it.
Yeah. Yeah. What a great analogy of us pushing the intellectual property offshore to go to other places that are, I've got some friends that are real big in the sovereign man idea, not being beholden to any government, having multiple bank accounts in multiple countries and multiple passports and things of that nature. And the one thing that they all seem to agree with, kind of the anarchist capital mindset and the libertarian mindset, is go where they treat you the best, go where they want you. And I think that's exactly what's happening to intellectual property. And those who have great ideas but may not have the capital, or it may not be the right regulatory environment here in the United States for them to pursue that dream here. So we are starting to see that, and I'm starting to see a lot of people moving to the Caribbean. There's a lot of freedom there amongst some of those smaller nation states that are just little islands there. So do you see a lot of capital that from your experience running off to some of these places?
Well, historically, it's been like that a lot. Um, Here, well, first, I'd like to just quickly comment on what you just said. The
Okay.
best ideas, right, are always going to come from those who don't have the capital. It's pure math. You know, the 1/10 of 1% has the majority of the capital, right? What are the chances of 1/10 of 1% out of a 330 million member population having the vast majority of the ideas that are worthwhile?
Great
Simple
point.
math, okay? And then when you break down the fact that the 0.1 of the 1% are usually generally comfortable, and the source of these ideas or significant drive to improve and do better and change, then culturally, there's no reason for these ideas to come out of that 0.1 of 1%. So mathematically, you're only a 0.1 of 1% of 330 million. And then you take out the need to create these ideas. So you have to take 1/100th of that 0.1 of 1%. So you're talking an infinitesimally small amount of people who can actually come up with an idea and then implement it and understand why the idea should be had. So the real ideas don't come from the wealthy. I don't think Jeff Bezos was wealthy, or Mark Zuckerberg, or Bill Gates. They might have been upper middle class, might have been well off, but none of them were multi-billionaires. None of them. Almost all of them were college dropouts.
Yep.
Right? So, I just hate to see where the country's going. Now, fast forward to offshore and capital havens. The largest offshore haven in the world is where?
Is that the Seychelles or is it the Cayman Islands? I'm not certain.
It's Delaware.
It's with the Delaware LLCs and having anonymity in the ownership of the LLCs.
By far the largest. The largest, the most popular place for airplane leases, Delaware. Okay. What's the second largest offshore capital center?
I'm not certain.
London.
Huh.
UK. Okay, so this concept of, little backwater places where you could bend the rules. Now, I don't want to get myself in any more trouble, so let's not discuss bending rules.
Yeah.
They are bent, but, the US and the UK are number one and number two. Now, you have a regulatory arbitrage business, and you have a tax haven business where, smaller countries with smaller economies say, we don't want to make money on taxes. We'd rather make money on capital flowing through us, okay, and the business that comes with it, than directly taxing it. And that's when you have, Seychelles and, Bermuda and Grand Cayman, et cetera, right? And they do have a lot of capital, foreign capital, and FDI going through relative to their economies, okay? But it's peanuts compared to the big guys. So just keeping that in perspective. Not
That's
even
great.
peanuts. It's like sesame seeds. Not even big enough to be peanuts.
Interesting. So I didn't know that. That's interesting. Thank you for sharing that with me. I guess I need to brush up a little more on some of the macro money flow in this world. I appreciate you enlightening me there.
The reason why London real estate can stay overpriced for so long is because all the money goes from all over Africa, Russia, et cetera. A lot of it goes into London. A lot of it goes into Manhattan.
Yeah. Interesting. Well, I'd like to pivot at this point in time. I don't want to hold you up too much longer, but I want to pivot to see if you've heard or are familiar with Richard Hart and the Hex project at all.
I am not, and that's no reflection upon the quality of the project. I've been in a rabbit hole with a lab, taking test tubes, building machinations to take over the world. So
I love it. So I think it's very like-minded with our discussion here today, and I'd like to give me a moment to give you our sales pitch, so to speak. But really, what it is just to try to strike a fancy, or maybe spark some interest that you might follow this rabbit hole as well. But one thing that a lot of us, we call ourselves Hexicans. So hex.com is a great place to go to read up on. And we've got the guy in the chat here that's revamping the website so it looks a lot more professional and more well done, because talking about what you're otherwise you're a scam. Exactly right. We talked about that at the very beginning of the interview here. And so that is being revamped as we speak, but there's a lot of libertarian and anarcho-capitalist minded people in this stream that want to be able to take all the middlemen out of the transactions. They want to be able to have a trustless way of conducting business, and in a way that it replaces a lot of the bank products without only focusing on currency. So let's be honest, Bitcoin tried to be a currency, it failed, but it ended up being something a lot more valuable, ended up being a store of value. And you look at the price valuations of these payment networks, and they're nowhere near the market cap of gold for store of value. So I think the real value for Bitcoin became the store of value. Well, now Hex was created in a way that it claims to be true DeFi. And when it released last year, actually it was in December of 2019, I believe it was actually the spark that ignited the DeFi craze of 2020 on the Ethereum blockchain. Because essentially what it is you take your Hex and you stake it like a CD on the blockchain. You commit to so many days, you get to dictate how many days you want to lock it up for, and you exchange, you literally burn Hex for what's called T shares or shares. And T shares is just 1 trillion shares, and the numbers were exorbitantly large, so that the contract can run for hundreds of years and never have an issue with the deflation of the amount of shares in the system. So without getting too technical into it, essentially what you do is you purchase shares with your hex, and that hex, or that the amount of shares that you have, dictates what your return is going to be over the time period that you have. And it's not in USD value, it's in hex. We all know cryptos are very volatile. They can go up and down in price, but this mechanism, because it's all code on the blockchain, allows you to create more hex using the staking mechanism, and therefore creates a trustless interest that you don't have to trust a third party like Celsius or Nexo or BlockFi or one of these companies to give you a return on the holdings of your crypto. So you continue to hold your keys at all times. And there are penalties, just like there are in the legacy product CD, where if you pull out early, then you will with Hex, they can even be they can be more penalizing, because it'll come out of your principal if you haven't served at least 50% of your time, or your stake is shorter than 90 days. But essentially, after that 50% mark, you take a hit on your interest, and that interest that you would have been paid if you had kept it till the end of the stake that you had promised you would stake it till, actually gets distributed back to the staker class. So what we really like about this is it can be a store of value. It can be a peer-to-peer cash if you choose to do so, which I don't think the value is in being a payment network. But really, it's the fact that imagine if you could have had Bitcoin in 2013, and just by staking it until 2021, that it would mint more Bitcoin. Think of it as the Bitcoin itself being miners themselves, and then printing more Bitcoin for the future. Well, that's essentially what Hex does. By burning it for the shares become the actual miners that dictate what your earnings are going to be going into the future. There's some other variable things, such as how much of the supply is staked that determines your APY, because the coin supply itself only has a 3.69% inflation rate every year, and it's only paid to the stakers. So it's actually a delayed inflation rate, because that 3.69% is only paid to the stakers, and right now, on average, the average stake is just under 5 years long. So there's a lot of technical sides to it, but essentially what it is you decide, you tell the system, you tell the truth engine that you're going to keep it staked for so long, you get shares, it pays you back in more hex at the very end of the stake.
See. Okay, how long has this been running?
Since December 2nd of 2019. So we just hit our 1 year about, what was that, 2 months ago. So
has this been accepted in the crypto news literature?
Oh, no, absolutely not. No, it's a scam. Richard Hart's going to run off with all your money, and everybody calls it a rug pull, and it's like, well, by definition, you guys don't understand what a rug pull is. Rug pull is when they pull the liquidity off of an automatic market maker like Uniswap. The only liquidity provided is by the OA, the origin address of the contract. There's obviously a lot of participants in the Hexakin community that are providing liquidity for it as well. But essentially, I mean, that was never our economic energy anyway. So the big yell about the scam is, well, you traded your Ethereum for Hex during the launch phase. So what happens with the Ethereum? And many of us Hexakins understand, many of us that are in the community understand that, well, I don't ask Best Buy what they're going to do with my money when I buy a TV. Like, I bought a product, I bought the TV, I took the TV home, and now I have possession of the TV. I didn't go ask Best Buy, well, if I buy this, you better tell me what you're going to do with that money. Are you going to use it for marketing? Are you going to use it for overhead? Are you going to pay bills with it? What are you going to do with it? Are you going to invest it in other things? Well, that's none of our business. So we bought Hex because we believed in the project. I wanted to be able to get trustless interest and gains on my crypto for holding, because in most cases, the people who make the most in crypto are coin founders and people who hold for a very long period of time. So if I'm going to hold for a long period of time, I might as well get some trustless interest while I'm at it.
Yeah. Okay.
So
Interesting.
Yeah, I encourage you to look at it because I see some parallels and some bridges that can be made between the two communities. And I didn't get to look into the coin launch for Veritasium. I was chasing ICOs in 2017, and I got wrecked pretty good. And so I was very skeptical. So it took a lot of time of following the Hex creator, Richard Hart, and making sure that if I was going to get back into something, it was something that I believed in. And he released it as a finished product, not as a project. So going back to that, we didn't release a white paper and everyone called it a scam.
Yeah.
But we, as those of us who understood it, had been following him during the development of the product, that it was a finished product and that there was no reason to have a white paper. If you want to read the white paper on how it works technically, that's great, but that's developer talk. Let's be honest. I wanted, as a business owner, I wanted something that worked and wasn't a roadmap and a roadmap to promises or failed promises, I should say. So we really enjoyed and followed the project. Most of us in the community since like 2018, I think, is when he announced that he was going to be doing something. So I missed the Veritasium altogether, and now it looks like I can't even participate unless it's on the tokenized gold side. But I do see a lot of, from my limited research I did before coming on the stream with you, I do see some parallels and some bridges that can be mended between the two communities. We're already on the same blockchain.
Okay. Let me just clarify. Um, After the adverse litigation, all of our tokens were removed from us.
Okay.
We don't have any tokens, Veri tokens. Uh, there were 100 million minted, 2.15 million approximately are in circulation. The 98 million or so, just under 90 million, were taken from us. And the regulator has created what they call a fair fund where they took the capital that they removed from the company and me personally to refund those who are affected, I guess they will call it, by the token offering. There's a community, Veritasium official on Telegram, where you can learn about it if you purchase a token, you want to be refunded, or other options. But we are not. I'm hands off of this because I cannot afford any more litigation
Yeah.
with regulators, etc. But
Yeah.
we have big plans, but the token and Veritasium have been separated. Um, the community is very active, um, and you can go and see what the community has in store because they're very active and they're looking for clarification. Okay, but
Okay.
that is totally separate from myself and totally separate from Veritasium.
Okay. That's good. I'm glad you made that distinction. That was one of the things that Richard was extremely adamant about, was making sure that he failed all four legs of the Howey test so that it wasn't a security and there was no expectation of profit from the work of others. In fact, in order to bring your hex out of a stake and to mint your own rewards, you are forced to actually run the contract yourself. So there's no expectation from the work of others. So yeah, I hate to say this because this sucks that this happened to you, but thank you for paving the way for the rest of us to know what pitfalls to attempt to avoid. And I appreciate you coming on our show today, sir. This has been great. And yeah, do you have any other thoughts on that?
I expect big things to happen going forward. Um, the players now are no longer uh, Bitcoin whales and F whales and developers. They're now central banks. So we're talking trillions. And
Yeah.
they're now money center banks. And they're now big Fortune 500 or in the US, Fortune 500 and LC 100 industrials. Tesla bought $1.5 billion of Bitcoin. Elon Musk seems like he's in the tech, and that is just scraping the beginning.
Yeah.
If you're excited about Bitcoin, you're going to have your mind blown with things that I have in store.
Oh, that's great. Well, I love it. Well, I appreciate your. Is there anything else? Go ahead, shill all of your presences on social media and the products and projects that you're working on, and let these people know where to find you.
Okay, well, unfortunately, I'm paranoid, so our projects private.
Okay.
We had joint ventures with some of the largest, with the largest um, securities exchange, in one of the largest continents in the world. Um, we've had one with Jamaica. These are joint ventures, and this was years ago, several years ago. But because I was basically talked too much, the kibosh was put on us, unfortunately. So now we're coming back again, and we, depending on how you look at it, are theoretically stronger than we've ever been, just lacking money and regulatory clarity. But we just stay away from those jurisdictions where there's no regulatory clarity. You can reach me at Reggie Middleton on Twitter. You can also at Veritasium Inc. on Twitter. And Twitter is where I make announcements, but actual discussions should be had at Telegram. Telegram is Veritasium Official. There are two Telegram groups. One has about 2,500 members, and the other one smaller. The other one is not what I would consider official because the company has no control over that. The Veritasium Official is not ran by the company, but it's the admins are responsible, and I'm confident in having people go there and discuss things Veritasium. There's no price discussion there because it's not about investment return. It's about functionality and utility. I believe that from a functional utilitarian perspective, 2021 on is going to look more like 1997 on for the internet because you get to see what this stuff can really do now.
That is great. Well, I appreciate you leaving us with those closing thoughts, and thanks for letting us know where to reach out to you and how to find you and follow and track what you're doing, because it sounds like you're going to be making some waves in this space in this new coming frontier. So I appreciate you coming on today, sir. Thank you.
Thank you, actually. Have a good day.
Absolutely. Hey, the rest of you hexakins and non-hexakins alike, thanks for joining us today. And with that, guys, we are on our way out.